So some of my favorite companies to buy and hold for the long term are what are considered blue chip stocks. Now, a blue chip company, if you're not familiar with the term, is a company that is well established, sells high quality products and services while remaining profitable, and has withstood even the poorest of market conditions. In a nutshell, blue chip stocks are essentially the best of the best companies in the world. They provide you stability while still offering to grow your capital over the long term. Well guys, the blue chip stock we're discussing today in this video is Disney stock. Now I believe Disney has been unfairly punished by the market here. It's had a tough 2020 and most of 2021 as well. However, things are looking good for this business going into next year. And I believe what we've been seeing in the last few weeks, and especially today with the sell-off, is an opportunity to buy for the long term. Disney stock today was down over 3%, dropping under $170 per share at one point during the day. This puts the company negative for the year, vastly underperforming the S&P by a large margin. Now, bigger picture over the last 1 year, the stock has outperformed the market. But then again, if we go out even further, 5 years, Disney is once again below the market average. So you can see, based on Disney's history, it has years where it vastly underperforms, then it has years where it vastly outperforms, and unfortunately, year to date, it's really just been a dog. But in my opinion, I think while 2021 was one of those years where it just doesn't do anything, 2022, 2023 are going to be years that Disney outperforms the S&P and provides us some massive returns. So now the reason that Disney stock was down today specifically was kind of twofold. There was some analyst news and there was some company specific news. The first is the analyst news here, and it comes from Barclay, where they lowered the price target on Disney to $175 per share. Now here guys is the analyst profile for the gentleman that downgraded Disney. And you can see his returns here over the last year, so judge for yourself if this should be taken seriously. Now the company news, which in my opinion is more important, is that Disney delayed all their Marvel 2022 films, including Doctor Strange 2, Thor 4, Black Panther, Wakanda Forever. But the good news is it seems that they haven't delayed Avatar 2, which is still slated for the end of 2022. Now guys, I will touch on these delayed movies a little later here in this video because it is important, and I will draw some comparisons to Netflix with this. But it's clear to say that the company has faced a lot of headwinds in the last year and a half, and we may actually be towards the end of that cycle. Since 2020, a few industries have been absolutely decimated. Travel, probably one of the most obvious. In-person entertainment, that's another big one. Even sports was impacted quite heavily, especially at the beginning of this issue. For Disney, the most obvious issue was the closure of their parks, which obviously crippled their revenue from one of their largest segments. Then of course, their cruise lines have also been canceled as they were deemed unsafe to operate, and again, this hurt their revenue. Then we keep going down with this. Their production house actually shut down as well. They had delays. New movies were put on hold for extended periods of time, and even today we got news that their movies expected for next year are going to be delayed once again. All of this has resulted in the company suspending their dividend indefinitely, which was a huge blow to investors who were holding this previously well-established dividend growth stock. The only bright spot for Disney in 2020 was their Disney Plus platform, which in my opinion shined for the business. You can see here how in June 2020 the company reported barely anything from parks and experiences and actually had operating losses from these. Not surprisingly, but at the same time, Disney Plus, the direct consumer platform, was growing rapidly, so this provided a level of stability for the business to get through 2020. In my opinion, since Disney was able to get through 2020 with majority of their business shut down, that tells me this company will get through anything, and that's why I consider this a very strong blue chip stock. Now Disney Plus, like I said, was kind of their bright spot, their saving grace. It was incredible what we saw with Disney Plus adoption here, and the company actually exceeded their goals for Disney Plus. They expect to see around 60 to 90 million subscribers by November 2024. And they surpassed that number this year in February, so well ahead of schedule. I believe the street is not giving this company enough credit here, and sooner or later they will have to. You can see the rate of growth here for Disney Plus, and they're not just US focused, which makes this a huge opportunity to capture over time. They've since revised their estimates for their sub count to 230 to 260 million now by 2024, which is quite achievable still in my opinion at the pace that they're going. Let's also not forget that they own ESPN Plus and Hulu, two other subscription services which are seeing double-digit growth year over year, and with ESPN Plus especially bouncing back strong with sports resuming. All in all, the last year and a half has forced Disney to shift from a traditional business where they just sell experiences in person to a company that can touch people around the world, have experiences digitally, and kind of become a more new age business here with their Disney Plus platform. But let's not forget and let's not disregard the traditional business for the company. It's still a cash cow for them, and it's still going to be a massive driver for profit in the years to come. Now, as we enter 2022, I think that we're going to see a lot of positivity around Disney, and a lot of these things that were previously headwinds for the company will start becoming tailwinds. Their cruise lines, for example, are coming back, and you can bet that this will post strong booking numbers as people cannot wait to hop on a Disney cruise after all the stuff that we had to go through over the last year and a half. They're even taking early bookings for 2023, signaling to us that there's quite a bit of demand and they want people the option to book further out if they don't feel comfortable traveling just yet here in 2022. Disney's parks should also continue to see strong demand over the next year as the US reopens flights to other countries, inviting more international visitors back to their parks. And with all the cash coming in the next year, couple of years, Disney may also reinstate that dividend that they suspended last year. And, you know, I'm not too sure if that's something that I'd want to see, but if that is something that they implement once again, I think a lot of money will flow back into this business. In my opinion, this is just my thoughts. I think that they should save that dividend money, reinvest it into the company, put out more movies, put out more original TV shows similar to what Netflix is doing, because I think over the long term, that's going to yield better results than just paying out dividends. Who knows how it'll end up, but this could be a blessing in disguise for the company, for a valid reason to cut that dividend and just kind of never reinstate it, because there's better places to put that cash now. This is actually an issue you see a lot with dividend companies. I think Walmart has actually been going through this a lot in the last few years, where they've traditionally paid out a dividend and that's kind of their focus. The investors want them to keep paying out the dividend. The company wants to compete more with Amazon and reinvest in the business. And it's just been a constant struggle, and it's held Walmart stock back quite a bit. So I'm glad that Disney now has already kind of ripped off that band-aid. Dividends already suspended. So if they don't reinstate it, no harm, and I think that's a really good position for the company to be in. But anyways, now let's talk more about their media production, because this is important. You know, we did see some delays get announced today, and let's talk about this. So what I want to do here is draw the comparison to Netflix. Netflix earlier this year said that they're going to have a weak first half of 2021, but their original content will still be strong in the back half of 2022. Well, during this time, Netflix stock actually didn't do too much, but recently we saw the stock break out, and it wasn't coincidence. Netflix's hit show Squid Games became available recently, hit worldwide, and it actually took off massively, which has created a lot of buzz and inevitably new subscribers for the business as well. Now, I expect something very similar to happen to Disney. These companies here can just produce one piece of original content that just sticks and just gets everyone talking about it, and that's going to drive a whole bunch of revenue for many years to come. Think about all the different avenues that they can exploit here if a show becomes super popular, or, you know, around the world especially, because they can sell merchandise, they can sell other products and services around it, they can create spin-offs off of it, TV shows, other movies. There's a lot that they can do when something picks up here like Squid Games has, and I think Disney, with their past history and their movies and all that stuff, they have the capability to have that happen time and time again as that content slate matures. But the unique thing about Disney here versus Netflix is that, you know, when Netflix says they're gonna have a good second half of the year, you know, investors sell out of the stock moves sideways, not much happening, because that's their core business. That's all they do. With Disney, remember, they have parks, they have cruises, they have other stuff, in-person experiences. So while they say, okay, you know, our content's going to be good later next year, in the meantime, these other parts of the business will pick up and help push the company forward. So this, in my opinion, sets the company up for a very unique 2022, very unique 2023, and I think that investors that hold the stock during this time period will be rewarded handsomely. So remember, so far this year, Disney has underperformed the S&P 500. However, I'm willing to bet that over the next couple of years, it vastly outperforms it. In the short term, hey, maybe Disney drops to the 160s, maybe even the 150s. And if that happens, I will be loading up heavy. But all in all, thinking 3 to 5 years out, which is my time horizon for my investments, I believe that Disney is going to be one of these stocks that a lot of people wish they bought here in 2021, because it's just kind of in your face with an opportunity here, but the media is kind of spinning it as, oh yeah, just, be fearful. They may miss on subscriber numbers. They may not do this. They may not do that. While the company just keeps executing. That's all I care about. Their fundamentals are strong. They keep executing. I am a happy shareholder. So on that note, guys, I have been buying Disney shares. I bought some last week, bought some more today. And I'll probably just keep buying a little bit more here and there if we remain around these prices, because I am very bullish on the stock once again. And especially after seeing what happened to Netflix here, with how they can really take advantage of content and international content, I know Disney can do the same. So anyways, guys, let me know in the comments down below. Are you also bullish on Disney? Are you bearish on Disney? Are you bullish on Netflix? Love to hear your thoughts on either of these companies in the comments down below. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.